Well, it's official. For the first time in decades, average 30-year fixed mortgage rates increased to over 8% as of Friday, September 29th. Take a look at this. This is absolutely crazy. Actually, I just did a Google search for today's rates, which again is on Friday. The average rate in California here for putting 20% down is 8.08%. And that's for a FICO score or a credit score in the range of 740 to 759. How insane is that? So in general, you get the best rate or very close to that when you put at least 20% down. And on top of that, you're buying your primary residence. And also you have a credit score over 740. So 8.08%, just absolutely crazy. I just can't believe this. Also, according to Investopedia.com, as of today, they're reporting the average rate again, for people with exceptional credit, 8.10% for a 30-year fix. FHA is at 7.92%. Jumbo is at 7.27%. And a 15-year is at 7.33%. And by the way, according to Investopedia.com, these rates here are the average of the best nationwide rates for a 30-year fixed rate, new purchase loans. So this excludes refis. Refis tend to have a higher interest rate. So only for purchase loans and also for an 80% loan to value ratio. This means if you're buying a house, you're putting down at least 20%, or if you're refinancing your mortgage, at least 20% in equity in your house as well. On top of that, that's for a borrower with a FICO score in the range of 700 to 760 and also paying no points here. So here's a look at the rates ever since early June of 2021. Again, right now at 8.10%. So 1 year ago, I should say actually 2 years ago, back in late August of 2000, not late August, late September. I don't even know what month it is. Late September, we were around 3.1 to about 3.2%. Let's just call it about 3% even. So I want to provide a kind of comparison regarding what's your average monthly housing payment look like today compared to what it looked like about 2 years ago. So here's a snapshot showing just that. The median sold price nationwide back in August of 2021, 2 years ago, was $361,500. Looking at your average rate 1 year ago at approximately 3%, excluding home insurance, taxes, and HOA, because that varies greatly depending on the area you live in. Your housing payment of principal and interest would be $1,219 per month. Now look at this. This is absolutely crazy. So the median sold price, according to the National Association of Realtors, as of August this year, is $407,100. Again, putting 20% down, just like the last example as well. And the new rate today at 8.1%, your new housing payment would be $2,412 per month to buy a median price home today. And that's a giant increase of $1,193 more per month to buy a median price home today compared to just 2 years ago. That's a giant increase of 98%. How insane is that? So like I mentioned in my previous videos, this is really acting like a quadruple whammy for homebuyers right now. So let me explain. So number one, the median sold price nationwide over the past 2 years, going back to August of 2021, is an increase of 12%. So home prices overall have increased by about 12% when looking at houses actually have sold. That's number one. Number two, rates have more than doubled. So of course they went from about 3%. Now they're around 8% right now. That's an increase of about 5 percentage points over the past 2 years. That's number two. But number three is because rates have increased by about 5 percentage points, going from 3 to 8%, that decreases buyers' purchasing power by about 50%. So let's say you qualified for a home loan at $400,000 2 years ago. Because rates increased by 5 percentage points, you could be looking at maximum qualification of only $200,000 versus $400,000 2 years ago. But keep in mind, home prices have also increased as well. So a $400,000 home 2 years ago is much, much different than a $200,000 home today, right? So that's number three. Number four, you're going to pay approximately $393,000 more in interest paid over the life of that 30-year fixed rate loan when rates are at 8.1%, which, by the way, that's a much higher than your original purchase price. So don't take my word for it. Look at this. Again, when you're at 8.1%, you're going to pay off this loan in September 2053. This is a 30-year loan. So the total interest paid is $542,808. And that, by the way, is much more than your original purchase price of only $407,000. So look at the big picture here. Over the next 30 years, you're going to pay about $543,000 in interest paid, which is about $136,000 more than your original purchase price back at $407,000. So this quadruple whammy is really the headwinds that home buyers are facing right now, which makes sense because we have all-time record lows, excluding April 2020, regarding the number of contracts being signed between buyers and sellers of existing houses. Based on my own analysis in my video I shared the other day with you guys from the National Association of Realtors. So of course it makes sense. We're seeing a huge pullback in demand because of all these headwinds that home buyers are facing right now. Now here's what we also know as well, because the Fed started increasing rates in the early parts of 2022. The current range in the federal funds rate is in the range of 5.25% to 5.50%. So when looking at the federal funds rate today, the effective rate is around 5.33%. That's the highest rates we've had going all the way back until February of 2001. I mentioned that because the Fed just announced that we're going to have higher rates for a longer than anticipated period here. So because we're at more or less the highest rates we've had going back to February of 2001, this is where it gets really kind of dicey here. Here's what's called the CME Fed Watch tool. This is the likelihood that the Fed will change the federal target rate or the federal funds rate in their upcoming meetings. Their next meeting is scheduled for November 1st. And by a 82.6% probability, the street is forecasting for the Fed to pause rate hikes. That's at 5.25% to 5.50%. On top of that, for the remainder of the year, including December 13th, which is their next meeting, or the last meeting of the year, the probability of a rate pause is also at 64%. And then to pause in their next meeting in January and also in March, as well as May 1st of 2024, by a 48% probability. Only a 27.3% chance they're going to decrease rates by about 25 basis points, going to 5 to 5.25%. Then it's not until our next meeting, which is scheduled for June 12th of 2024, where the street is virtually split here regarding a further pause in the federal funds rate or a decrease by 25 basis points. So we are basically in this environment where we have high rates right now, which is forecasted to be high through at least June next year. Of course, a lot could change, but the high mortgage rates we're seeing today will likely stay fairly high if no news comes about regarding huge decreases in inflation, for example. So I would expect we're going to see a higher rate environment for a longer period of time due to the Fed not pivoting anytime soon. Now, here's some other things I want to share with you guys today as well, because here's the National Association of Realtors Central Lock Home Showings Report. They corroborate with Central Lock, which is a lockbox company that real estate agents use in order to get access to houses for sale. So you could call, or you could access a Central Lock lockbox system when you're showing houses to your clients, and they actually track that data on a national level here. So on a national level, home showings decreased by 9% this August compared to August 2022. This report, by the way, was just announced a few days ago. It says August 2023, U.S. home showings were down 9% year over year, according to data from Central Lock, which of course is a lockbox company. The pace of showing activity, or the number of real estate showings, also decreased compared to July as well. Additionally, all 4 U.S. major regions also recorded a decrease as well. So overall for the U.S., we're down, but also for each of the 4 major regions, it's also down as well. So for example, in August in the Northeast, Home showings decreased by 17% year over year. The Midwest fell by 8%. The West decreased by 13%. And the South fell by 4%. This is a map showing just that. The biggest decrease was actually in the Northeast, falling by 17%, followed by the West, down by 13%. So that's what the National Association of Realtors had to say regarding home showings this August. But I also want to provide an update from showingtime.com. They look at real estate showings in North America, but they look at it over the past 7 days or 7-day blocks here. I can't talk. Anyways, this data is actually through September 28th, much more recent than the previous report here. So according to Showing Time, for the week ended September 28th, this year we're down by 8.8% compared to the start this year. At this time last year, they saw a huge decrease, down by 21.9% compared to a 7.1% gain in 2021. And also, I'll say this again because you guys may have noticed here a huge pullback in showings around September 9th through September 13th. I actually emailed Showing Time and said, is this an error? What's going on here? Because during the Labor Day holidays, we tend to see a decrease of real estate showings, down by about 10 basis points compared to the previous week, not down from about, 15% down to 263% the next day. I would imagine, again, this is probably due to the cyber attack that affected or was impacted by a lot of multiple listing services nationwide, not due to a giant pullback in real estate showings down by over 200%. That doesn't make any sense to me. In any case, I also want to share this with you guys as well. This is the number of people searching for homes for sale on Google. So for the week ended September 30th, which I guess would be tomorrow here, the index is at 80. 1 year ago, the index was also at, or very close to that, at 83. So a slight decrease compared to last year's levels, which more or less means that there's more or less the same interest in people searching for homes for sale on Google compared to 12 months ago. So I'd love to hear from you guys. What's your biggest takeaways from today's video? Mine is this right here, because we haven't seen rates above 8% in decades, going back to the 2000, I think it was around 2000, if I'm not mistaken. Absolutely crazy. And keep in mind, these are people with exceptional credit, over 740. When we change this, let's just change this to 700 to 719. It's at 8.46%. Less than that, 660, 8.7%. On top of that, this is people buying a primary residence. When looking at rates to refi, look at this. According to Investopedia.com, for a 30-year fix, 8.10%. But if you want to refi, you're going to look at an average rate, again, if you have exceptional credit, at nearly 8.5%. In my personal opinion, the giant increase in rates we've been seeing this week, and frankly, for the past several months now, is really going to impact sales in the next coming months. I would imagine that the future videos I make based on my own analysis of the National Association of Realtors data regarding sales is going to absolutely tank in the months ahead here. Pure speculation, but we have all-time record lows for pending home sales, 8% rates, and on top of that, a huge lack of inventory. That implies we're going to see a huge pullback in closed home sales in the next coming months. But what do you guys think about today's video? What do you guys think about 8% rates? It's absolutely crazy. And with that said, thank you so much for watching today's video. I appreciate you. Please like and subscribe. Of course, also consider subscribing as well. And also, if you guys want a real estate agent referral, whether you're looking to buy or sell a house, check out my new website, which is realestateteamfinder.com. Happy to hop on a phone call with you and discuss your real estate goals so I can best match you with a great real estate agent in the area you want to buy or sell a home in the United States here. So thank you so much for watching today's video. I appreciate you, and we'll see you on the next video.